They're definitely not going to raise rates, but then I think it's indicating, is it one, is it two, or could it honestly, it could be 0 hikes this year.
Right.
If you think they're close to the neutral rate, which we do, it means they really don't have to raise rates.
How confident are you in your earnings estimates for this year, given what we're seeing from Caterpillar as well as NVIDIA?
I think there's way more uncertainty and volatility around earnings estimates than there was last year. But I would say we were so sure of things last year, and that didn't matter. Investors didn't care, and equities obviously had a very difficult year. I would say that even though earnings growth is coming down dramatically, growth-wise, valuations look really good. So we're pushing and looking back at that fundamental.
I'm just thinking about the earnings recession that Bob Bassani mentioned a short while ago. Is it possible? We've been talking about economic recession. Maybe that's not quite it. Maybe it is this idea of an earnings recession, a couple of quarters where earnings just don't grow.
That's right. And I think it's really bold to maybe say, our cycle's still alive? We don't even know, right? Because the cycle feels so long and drawn out. And then, like you mentioned, Kelly, we've already had kind of interesting dynamics with earnings. Maybe it doesn't look so typical that we have a recession and then have a bear market. It could look kind of different this time, which I think it feels weird to talk about. But last year was an odd year because the economy was growing, earnings were up, and yet equities were down for the year.
And speaking of odd, we've had a couple of odd jobs numbers the last few months here. What are you guys figuring out we're going to have on this Friday?
So continued strength, right? The JOLTS data came in a little bit weaker, but that was unbelievably strong. So the labor market is still really tight. Things are still really good. It's more subtle, and I would say under the surface, but the labor force participation rate is going up. So we are drawing in those marginal workers, which is good because we know we need them. But I think it also kind of skews the jobs picture a little bit because it has the ability to bring the rate down.
And wages are starting to creep up, though.
Yes, wages are creeping up.
When you're talking about how odd things might be, if I'm an investor at home, that doesn't give me much confidence or reason to be invested in the market at this point. Because as you had said, last year earnings were great, equity markets were terrible. So what makes you think things are going to be better this year? What do you tell an investor?
So we're saying you still have to be focused on the long term, and it's harder, Melissa. I will give you that, right? We say that to clients and they still feel jittery. So we are preparing for late cycle because we're in it. So we are adding more core, good quality fixed income, even with rates going up. And we want to have equity exposure, but I would say we're doing it in a much more risk cautious way. So there's a hedged component to it. We're doing a lot of volatility dampening, and we're saying we're willing to give up a piece, dare I say even a big piece of the upside, as long as we can just stay invested.
You're much more defensive.
Much more defensive.
I just wonder what happens if this cycle, the only out of consensus point of view, I think, is that it keeps going and going. It's like the Energizer Bunny. It just keeps going and going and going, and no one's positioned for that.
Right, and it's hard because we still like EM, right? So let's throw into this that we're still all talking about emerging market equities.
That's a whole other.
Clients don't even want to hear
That's
that.
like loving the Cubs.
That was a sports reference I didn't get.
I'm sorry.